Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now, in today's video, keep in mind all the options are going to be for selling options, more specifically selling put options as part of the larger wheel strategy that I like to run on the channel. It's a very easy strategy to run, whether you are a beginner, intermediate, or even advanced investor. Provides some great passive income on some of our favorite stocks and is something that you can implement and scale up or down depending on your account size overall. So in today's video, we're going to go over a few things together. Number one, we're going to be going over the expectations for the week. Where do we stand in terms of the macro data that could come out this week? Where do we stand also in terms of earnings and technical analysis too on the indexes now that the SPY and the QQQ have pushed up wildly in the past 3 weeks, hitting overbought conditions on the SPY and coming into a bit of a greedy environment? Is it still a good idea to chase some stocks to the upside, or is it better maybe for us to wait for some downside for little better levels in terms of writing put options? All that we'll take care of in terms of today's video in the intro, and there, of course, after get into the top 5 options plays. And as of course, per usual, we do have several bonus plays for you, about 15 bonus plays today, guys. So make sure you stick around to the end for that. If ever you want to skip to a certain portion of the video, feel free to click the links in the video description to get to the portion that you prefer the most. Without further ado, let's get right into it, shall we? So in terms of the expectations for the week, well, in terms of macro, it's going to be a fairly light week, guys. We don't really have too much. A bunch of Fed speakers on Monday and Tuesday, and on the Thursday session, you get global manufacturing PMI and global services PMI as well. This will probably be the bumpiest day of the week, but all in all, as you can see, no jobs data, no inflation data overall for the large part, and of course, no big data releases like GDPs and stuff like that. So we should be pretty smooth in terms of this week. However, we have to keep in mind that Friday we got something after the close, and that was, of course, Moody's downgrading the United States credit rating, citing growth in the government debt. Obviously, the government debt has been front and center for these rating agencies. However, I will remind you guys that this is not new news. Moody's is actually the last of the rating agencies to downgrade the US debt from AAA to just a notch below under AAA, which is referred to as AA+. The other major credit rating agencies such as Standard & Poor's, S&P Global, they downgraded the US from AAA to AA+ in August of 2011. It's been almost 15 years since they did that. And Fitch was the most recent one back in 2023 in August, right, from AAA to AA+. Now Moody's joining their peers in downgrading to what they refer to as AA1 from AAA. And just to give you guys a quick little benchmark here, here's the AAA ratings, and AA1 for Moody's is equivalent to the S&P Global and the Fitch ratings of AA+. So, I mean, it is new news, but in all logical reason, right? It's not really new news overall. They were the last to do it. However, this could lead to some early morning volatility on the Monday session, which could be a great opportunity to open the door to write some short puts. As you know, we love to write short puts on a red day overall. Now, that's it in terms of macro and headline risk to look out for. In terms of how we stand on the technical basis, well, as we can see, guys, SPY is very clearly overbought. The QQQs as well are very clearly overbought, and it's just been 3 weeks of nothing but upside, with people anticipating a pullback eventually. Now, where could that eventually transpire? Well, we're coming into big resistance here at the SPY around the all-time highs, around 600 to about 610. And on the Qs, we are kind of almost into resistance right now. Similar area around the all-time high resistance range of 525 to 535. Now, suffice to say, the bulls are probably running out of momentum soon. So if I were looking for one area of rejection, it would possibly be in or around here. We'll see if this piece of news is enough to start us off into daily consolidation. But I will remind you, now that the bulls control the daily uptrends, and also they control the weekly uptrends too on the SPY and the QQQ. Any moves lower will be looking for higher lows. Anything above 427 on the Qs looking for a higher low pullback, and anything on the SPY above pretty much 510 will be looking for a higher low pullback. So we do want to be targeting areas of support below. On the SPY, that will be 585 to 575. Pullback, that will be synonymous with some pullbacks on your favorite tech names, some of your favorite value names potentially. So watch out for pullbacks into support levels, as now that the bulls do control these short-term timeframes, such as the daily and the weeklies, and that we are almost engulfing on the monthly timeframe as well, the bias right now is, of course, bullish. Now, keep in mind, guys, we are going to be fairly careful on the puts, and always remember to only write puts on companies that you actually want to own. So that is the preview for the week, guys. will be anticipating some pullbacks, and I will be a big fan of writing some put options on those pullbacks. But what I am not a big fan of, which is what some people do, is on green days, continuously chasing the market, writing puts below the market, slightly below the market, and chasing the market to the upside. You're just opening the door up, guys, for an engulfing move to the downside, getting underwater, and then you have no more money to buy the actual dips that could persist longer for just a day or two in terms of that weekly consolidation. So just be careful as always and stick to your rules. So that's everything for your market recap here and market preview. Let us dive into some of these strategy rules that I look for in terms of writing some short put options. So just to do a very, very brief recap of the rules, guys, you might remember that we've been running the bear market wheel strategy for a while. Now, I will not be going over all of these rules in detail just to save time on the videos right now. I've been going over them every single Sunday video for almost the last year and a half, so you guys should have a pretty good impression of what I want to do. If you're, however, new to the channel, I will leave 2 videos down below in the video description, 10-minute recaps of how I choose to write either the bear market wheel strategy, which is this one. Now we're no longer in a bear market, of course, and also the bull market strategy, which looks something like this, right? You guys might remember this one. It's not on there. Sorry. It's this one right here. So you might remember the bull market strategy, which are these rules right here. So take a screenshot of these 2. I'll leave 2 videos in the description where I go over more of these rules more in detail than I'm about to do right now, right? Suffice to say, right now in the current market environment, if you want to know whether I'm using the bull market wheel strategy or the bear market wheel strategy, it'll be kind of in between the two. I'll be using the bear market wheel strategy for companies that are decent companies. However, I don't quite trust them and I still want to be relatively far away. You could view that sometimes on companies that have phenomenal intraday drops, such as Fiserv as of last week, and also companies like UNH, which have been really struggling. If you still want to play them, we want to play them with more margins of safety because we know there's a lot of headline risk there. They're companies that I don't mind being assigned, but if I do get assigned, I want to get assigned at the best possible level, considering the momentum to the downside is very large in this market environment. And if you get a SPY and QQQ pullback, that will exacerbate the levels of declines that you're possibly looking for. Where I'll be using the bull market strategy, which is this one right here, I'll be doing it on my favorite companies looking for pullback areas. Companies such as Amazon on a pullback, I'll probably be getting a little bit more aggressive and running the bull market wheel strategy on my top favorite companies. So if you ask me which one of the 2 I'll be running, it'll be a hybrid of both until I'm truly convinced that we've largely got through all of the uncertainty throughout this year surrounding the tariffs and all as well of the recessionary concerns. That, in my opinion, will not happen until we get the hard data end of Q2 into Q3. That'll give us a better indication of whether or not we're going into a recession or not overall. So I'll be playing a hybrid between the 2. Quick little reminder here, the major difference between the 2 strategies is in the ROI that we're looking for per week. On the bear market strategy, we are looking for 0.25, and the rules are a bit more conservative. Now, in the bull market strategy, we're looking for a bit more ROI, and that is going to be roughly 0.5% to 0.75% overall throughout the week. What does that look like on an options chain? Well, I'll remind you right here. If I'm looking for a 0.5% rule, it's very, very simple, guys. You can do this in your head. You look for half of the strike price that you're interested in, half of the strike price in dollar increments or in cent increments. So half of 200, you should be looking for about $1 here on the bid. That's how you know that it represents the 0.5% rule. And if you want the 0.25% rule, just divide this by 2, and that should be a strike that you're looking for. So it would be in between here, right? The 0.5% rule for the bullish wheel strategy would be this 200 strike right here. And for the bear market rule, well, the 197.5s are a little bit too much, but you'd be looking for 50 cents. So it'd be one or the other overall. Quick little math, right? If you divide the bid right here, let's say $1.05 divided by your strike price, you'll get over 0.5%. That's how you know you're within reason. And that's an easy way to go through a ton of options chains really quickly without having to look at deltas, because deltas vary a lot with the variations in implied volatility, the variations in the VIX. So rather than looking at delta alone, I'll be looking for the percentage rules here on the strikes because they encompass those changes in volatility overall. They either get pushed down further or pushed up a little bit closer, right? It's easier to follow, and you can do a lot of these in your head really quickly and go through tons of options chains really fast. So overall, all of that considered, and if you're looking for the expected moves, guys, always remember you can find the expected moves on any given stock in any given week on barchart.com. Just type it into Google, bar chart, expected move, then the stock that you want. You'll come to this page right here. So once again, take a screenshot. These are the bull market rules. take a look at this one. These are the bear market strategy rules. Take a screenshot, and for any further descriptive, any further descriptive analysis of these rules and how I trade them, I will leave 2 video links down below in the description. They're about 10 minutes each. It links to the portion of the videos where I used to go over these more into detail, but now to save time, we're just gonna get right into the plays, shall we? All right, so talking about the top 5 options plays. Well, if you listen to the introduction, guys, you know that I'm a big fan of waiting for pullbacks, but now on the pullbacks, I'm going to be targeting my favorite companies at my favorite strikes absolutely. So stock number 1 out of the top 5 options, guys, is going to be Amazon. Amazon, one of my favorite big tech companies in the entire market right now. The valuation is still quite manageable here at about 205. We went through their earnings a few weeks ago, really liked what I saw, and in terms of the future prospects of the company, they're looking very good. Improving free cash flow, improving net margins, the EPS about to go exponential here, and the revenue continuing on its march higher, about to be $900 billion by 2028. So all in all, Amazon's looking good. But as with everything in this list, guys, they have pulled off a lot from the tops overall, and any index consolidation could give us some very juicy discounts for a little bit of a higher low on the daily timeframes, down into the EMAs and down into the lower bound of support here, which is around the 190 level. The expected move on Amazon for the week is 200.41, but I want to be getting in this pocket down here, right around the gap fill. If I can get the mid 190s, that'll be the juiciest spot of them all. So if we take a look at the options chain right here, right, the expected move at 200.41, let's go shopping on Amazon and see what can we possibly find, anticipating possibly further pullbacks, because we want to clip into Amazon stock on a pullback. If ever we get assigned, we have a very good chance, since the bulls control the weekly, of the stock pushing higher after our assignment, especially with a weekly cross of the MACD to the upside. So take a look at Amazon. It was my example in the early part of the rules introduction, right? You can see here that the 0.5% rule, if you're an aggressive bull, you might want to do something like the 200 strike for about $1. That is still under the expected move, ever so slightly by about 41 cents. However, if we want to play this one a bit more defensively, right? If Amazon drops early morning, let's say the markets pull back because of this headline right here, and you could find Amazon down 1 to 2%, that is best case scenario. Potentially, this premium is going to move 1 strike lower to the 197.5s or the 195s. So at a first glance this week, guys, I want to be getting 197.5 or 195. Hey, if Amazon drops 3-4% Monday or Tuesday morning, perfect. I'll be able to get even lower. All as well as what I'm trying to say here is anything under 200 for me, guys, is fair game. 197 all the way down to the 190 strikes is the pocket which I would not mind writing short puts on Amazon in. And if I were to be assigned, we have a huge level of support down here, 191 to 180, which is going to be very tough for the bears to get through overall. So that is play number 1 on Amazon. I'll be targeting this little pocket right here with all the EMA supports, and below us the actual horizontal support, which is quite a very large one for Amazon. That's stock number 1. Stock number 2 is Google. We've been playing this one a ton on the channel recently, with good reason, because the valuation does support a little bit of upside expansion. It is still relatively inexpensive compared to where some other stocks are trading right now. And also, it's kind of trapped in a bit of a range right now, right? We're trapped in overhead resistance right now, and we're also above overhead support. So if we do consolidate on Google, I'll be willing to play the lower bound areas down here. I'll be looking to play GOGL because on a share price basis, it's a little bit cheaper overall. And if I wanted to do that, I want to play down here in the lower 150s as much as possible, as close to the tariff fear lows and as close as possible to that big support range down there around the 150. So the expected move on Google right now is 160.87. Let us go shopping on Google. Can we find anything in the lower bound of the support down there, which is the low 150? So let's pull up Google right here in terms of the options chain, and we'll go shopping together. Can we find anything for Friday in the low 150 range? Well, as we can see, the 0.5% rule here comes in at 160 right now. So it's still a little bit too high. Half of 160 is about 80. So you're looking for at least 80 cents on the bid if you're looking to be playing the bull market wheel strategy. Now, the bear market wheel strategy would be half of that. You'd be looking for roughly 40 cents, which would be the 155s at about a 9 delta. In all reality, for me, it sits kind of somewhere in the middle. The 157.5s look quite attractive right now with an expected move of 160.87. Well, I'm going to be waiting for a pullback here. If Google continues pulling back, trying to set up some form of a daily higher low and pulls down into the expected move Monday or Tuesday, let's see, you see it clip down into the 160 range, 161. Well, guys, that's going to free up some of my favorite strikes, the 155s, even maybe the 152s for better premium than you're seeing right now. So be patient on this one, but at a first glance, I would not play Google anywhere between 155 and 150, obviously trying to get as low as I can possibly get in this lower area of the fear-driven sell-off lows. That is stock number 2, which is Google. Stock number 3 is going to be Apple. So Apple as well, struggling to break up above its resistance range, 221 down to 211. Now, the valuation on Apple, I will admit, is a little bit high, but at the end of the day, Apple is Apple, right? It's one of the largest components of the S&P. It will not get left behind, but one thing's for sure, if the markets do choose to consolidate, Apple as well will consolidate. And right now, I love playing mid-sized ranges, such as the range we have here between resistance and below, which is support. So I'm going to be looking for a pullback on Apple and trying to target the bottom end of this range down here, one which starts under $200, roughly 197 down to roughly 187. If Apple pulls back, that might free up some of these strikes down there for me to be writing put options on this very strong and very solid company. That resistance range is no joke. It's the highs from 2023. So let's keep all of that in mind. And the expected move is 206.30. Let's go shopping on the options chain and see where can we possibly write some Apple puts over the course of this week if the stock drops on Monday or Tuesday. Well, as we can see right here, if we're looking for below 206.30 and we take a look at Apple, Apple does not have the best implied volatility, so you do need to be patient and wait for a drop. Look, I mean, even here, right, where does the 0.5% rule come into play? 205, you're looking for about $1. You're not quite getting $1 at 205, right? And that is barely below the expected move. So in all reality, we need Apple to pull back. Give me 1 or 2 red consecutive days in a row. Look for a higher low right here for the bulls, understanding that the weekly supports are still well intact down there. And that would be synonymous with me wanting to go shopping on Apple. So if I'm looking for Apple strikes this week, it will be probably 200 and below, but I need a red day, right? I'll be looking for either the bear market strategy, a 50-cent strike, or the bull market strategy as close as possible to $1, but the stock for that needs to move down. If you ask me, my desired strikes for the week, it's going to be between 200 and 195. If I can get 200 to 195, guys, it's the bottom end down here, and that's where I would not mind being assigned Apple if the indexes were to go into consolidation. I don't mind playing Apple, but I need to get a very good price for it, and for me, that is synonymous with being anywhere under the $200 mark. Now that's everything for the top 3 plays. Now the number 4 play is going to be a cheap play. For those of you that don't have 2 large accounts, this one is also scalable. If you have a large account, you can do more contracts, of course, and it's going to be SoFi. SoFi's been on this top 5 list for pretty much about 2 months now, almost every single week. Why? Because it's relatively inexpensive in terms of its growth overall, and it has not run as much as other stocks in the market and has set many different various support levels below us. Number 1 is the 1250 range down here. All of these guys from the previous daily uptrending leg, and also all the way down here is a very big one below 12. So in the event I get assigned SoFi here because I play it a bit close, I can always DCA because the contracts are so cheap for many people, so keep that in mind, right? All those reasons lead me to really like SoFi in the current environment. However, we are coming into resistance right now, 14 up to 16. So if SoFi with the rest of the markets on Monday or Tuesday has a bit of a consolidation day, that might free up some strikes, guys, in around the 1250 range, or maybe even lower towards the 200-day EMA, with goals of possibly adding into the position into the 11 range. So at a first glance, the expected move for the week is 1328, but I do not want to write too close, guys. No. I want to be writing down there into further support ranges. So let's have a look on SoFi where we can possibly get some short puts in. Well, as we can see right here from the options chain for the Friday close, you can see that there's roughly 0.5% right now available at the 12.5s. Now, some more aggressive bulls may want to write the 13s, but that's a little bit close, right? It's kind of like the midway between resistance and support. I want to be a little bit lower. I want to be down below at these guys, which is the 1250 range. So I would not mind writing the 0.5% rule for roughly 5-6 cents on SoFi here. I know it's not that much premium, but 0.5% is 0.5%, guys, right? Whether you do it on $1,000 or $10,000, 0.5% is 0.5%. So this criteria would be met in terms of our minimum ROI. Now, the best case scenario is if SoFi drops Monday or Tuesday morning, well, then you might find more premium on these 12.5 strikes, or maybe even you can find the $12 strike strikes. As low as you can possibly get in this lower range, but just keep some available room if you like SoFi to DCA in case the markets really pull down hard and we go into some form of weekly consolidation on the SPY, the QQQ, which could also be weekly consolidation for some of these growth names as well. So just don't get caught with your pants down in terms of going too heavy, too high, and then have nothing left to buy down there. That is stock number 4. And stock number 5 is one that I haven't featured much on the videos recently, but I do like overall. Now this one, full disclaimer guys, is highly sensitive to interest rates. Highly sensitive to interest rates, and it is Rocket Mortgage, right? This is a play eventually for rates being able to come down lower in the year, and it is a no recession thesis for freeing up of the housing market. We know the housing market has been gridlocked and has not been very active for the past 3 years at this point with the heightened interest rate standards. However, if I get assigned Rocket Mortgage shares down there, it's at the lower end of a very long-standing range of support that the bulls have built for roughly the past year and a half at this point in time. And the valuation does support more upside. Now, they've bought several solid companies recently, such as Mr. Coop Mortgages, and also a company like Redfin as well. They're just expanding, and I really like Rocket Mortgage down here around the $12 to roughly $10 range. But right now, it's a little bit high. I've been playing it within my Discord group a lot of times recently. Right? So let's go shopping on Rocket Mortgage for the support range down there. Right now, the expected move is 12.6. And overall, let's go see on the options chain, what can we possibly find maybe down lower in that $12 area? So overall in the $12 area, we'd be looking for roughly 5-6 cents, which would be the 0.5% rule. As you can see, it's actually offering us roughly 5 to 6 cents on the bid right here, which would be 0.5%. Now, Rocket Mortgage below that is not very liquid at all. So suffice to say, if you want lower than 12, you're going to have to wait for the stock to maybe dip a little bit more. I would not mind writing the 12s. I've done them several times in the past, but preferably if you can maybe find an 11.50 strike, that might be more advantageous for you, right? So that being said, first glance for me right now on Rocket Mortgage will be the $12 strike. It's another cheap stock that, you know, maybe I start a half size position there, and if ever it drops a little bit more, maybe I can DCA a little bit more into this area down here. This one is good for 2 reasons. We can wheel it, either get in with short puts and then get out with covered calls, or maybe if you like the stock a lot, you can afford to possibly hold some of the shares and go for that thesis expansion of this company being able to really grow in a lot more so than it has been recently, with expanding EPS over the next few years and expansion of revenue as well. So those are the top 5 options plays of the week. Hopefully you guys found some inspiration from them. And now, as per usual, let's get into a ton of bonus plays that I like as well. Now, these bonus plays are all good, except for they just do not meet the top 5 options criteria insofar as saying they are not quite ready just yet. They are on my radar throughout the week. If they drop significantly, then I can possibly play them. But as of right now, they're just not quite ready. So we're going to start off in 3 tiers. I'll give you guys some growth stocks, I'll give you guys some value stocks, and then I'll give you some stocks if you have a very large account, such as I have a very large account as well that I run these plays on, and you can afford to write some stocks with a $300, $400, $500, $600 share price, right? If you want to go for the bigger plays. So let's start off with the growth segment, yeah? So stock number 1 is going to be Affirm. So Affirm, I really like them. We covered their earnings last time. Keep in mind, guys, I will not be giving the expected moves for these. You guys are now pros at this strategy. I will let you identify the expected moves and the strikes that you should be looking for. I'll just let you know which area that I'm going shopping for them in. So Affirm looking pretty good in terms of its forward expansion. If I can see more short puts with a capacity down here between $45 and $40, I would not playing Affirm, giving it a chance to really expand into that revenue growth and EPS growth. Looking pretty good. The support area down here, 45 to 40. So if I see them down there, I'll probably be looking to play them. They're just not quite there yet. I need a bit more pullback to really free up those lower strikes. Now, stock number 2 is going to be TSM. TSM needs no introductions. Extremely fantastic fundamentals right now. The problem is that the stock has run a little bit too hard. Rather than chasing it, and then getting assigned and not having the best possible price, I'd rather wait for maybe a little bit of market consolidation. If we dip back into the mid 180 levels, I'll be looking for down here, the mid 170s to 170, 175 to 170, the lower bound, the start of this secondary support range, and right below all the moving averages, all those daily juicy EMAs right there. So mid 170s to low 170s on TSM. It's just not close enough, but I'll be paying special attention on a pullback. Another stock like that is Nvidia. It's just ran too close. So rather than me writing it down here saying, oh, we're just going to go for a breakout retest, maybe it's not that simple. If we retest the lower bound of support down here, I'd be interested in writing maybe Nvidia 118, 115. If you get a pullback 3, 4, 5%, that will definitely free up those strikes. It's in around the EMAs and also in around our support range here, 115 to 105, which is the larger support area that we just broke out from. I'll be patient, wait for a pullback, and then I'll be looking to strike on Nvidia down there. Another stock in that same line of thinking is AMD, of course, in the semiconductor niche, has rallied fantastically. So rather than playing it too close, which is not the right strategy for the wheel, guys, the wheel is defense. It's not meant for offense. If you want to play offense for cheap, you got to go with call options, leap call options, or leap call debit spreads overall. Riding the wheel super close with 100 shares are not the most optimized thing to go for upside, guys. You want to put in as least amount of capital as possible to really maximize the upside. So playing the wheel by chasing the market, it's just not the right tool, guys, right? It is a defensive strategy meant for premium farming, not one in which you're meant to, chase the market to the upside, right? Get assigned and then take along on the shares. No. It's just too capital intensive, right? So moving on further, AMD, same concept. If AMD pulls back into the support range we just broke out of right now, lower 100s for me on AMD. If I can find a pullback here and write maybe like a 105 to 100 strike, I'd be very happy with that. Another one I'll be looking out for is Fiserv. Fiserv had a tremendous drop after their Clover revenues. We're kind of in line with Q1. That was the guidance that was given during a JP Morgan conference just a few days ago here in the markets, right, on the Thursday session. Down below support is the 156 down to 145 range. So I'll be trying to target this range overall. It's looking good. It's the monthly pullback into the monthly 50 EMA. It's the pullback into the 200 weekly EMA, which is rarely tested for this stock. At that point, it would arguably be close to weekly oversold, and it's already very close to daily oversold too. So Fiserv down there, I don't mind playing it overall. Another fantastic growth stock. Another fantastic growth stock is ANET. We covered their earnings just a few weeks ago. ANET was pretty good, although the valuation is not the best. They kind of deserve a higher valuation because of how consistent and how profitable the company is overall and their importance in the AI landscape and the data center build out narrative right now. That being said, we're pulling into resistance right now. So if I can find some consolidation into the previous support range, 90 into these EMAs, maybe I'll look to write the bottom end of that, right? Think the lower 80s. So if I can find ANET, lower 80s on a pullback, it's on my radar. Another stock that's on my radar for a pullback is Symbotic. Symbotic with a fantastic rally from the lows, but if ever they get a little bit of weakness with the market and choose to go set some weekly higher lows, maybe down here into the 23 range, right? A little bit of a higher low for the bulls potentially. I'll be looking to find some short puts down here, 22 to 20, closer to the bottom end of this support area down there. That is everything for Symbotic, another cheap one. And lastly, KWeb. I do still want to play the China trade, but when I play it, I want to play it safe, right? I'll be targeting down here on KWeb, roughly, let's call it 32 down to 29, as low as I can go. Any further pullbacks on KWeb, if I can find some premium down here, 31.50, 32, let's call it, down to under 30 bucks. That's the big support range. It used to be resistance for a while. It's been acting as support since pretty much last fall. If I can find some trades down there, I'll definitely be interested on KWeb. That's everything for the growth segment. Value segment right now, looking for CMG. So CMG, I know some people say it's a growth stock. Some people say it's a value stock. Hey, it's quick service restaurants, yeah? That kind of goes into more value for me, but I digress. We have some form of a inverse head and shoulders pattern right here. The company is looking to break out. However, if it doesn't, keep a special eye on these strikes down here, guys. $48, $47 range, not that bad of a play on Chipotle. It is somewhat defensive in this current environment, even though their guidance was a bit lackluster, right? They do have a very loyal customer base. They're continuously expanding stores. The valuation has come down a little bit. It's still somewhat rich, which is why I need a good deal on it, right? If you pull back, I'll be looking for the high 40 range. I think it's fair, and I would not mind being assigned so much on it down there, but we got to be a bit careful because if they break, the next line of defense is at 45 and then all the way down to 40. So I would not be playing it on a full size position. I'd be playing, like, if my total size on this one could be 2 contracts, maybe I do 1 here just in case it really unravels for XYZ reason. At least I have some DCA money to go shopping for it down there again. The second one will be Nike. Nike has just been historically low recently. I mean, you're talking about prices of like 2016, 2015 on Nike right now. However, the bulls have claimed a little bit of an area right now. Daily uptrend is looking nice, But if we pull back, all of these guys are going to be acting as support below the market. So 57 to 54, let's call it on Nike. I would not mind playing Nike down there. Another one is NVO. Healthcare has been wildly out of favor recently, and that's in spite of NVO's earnings, which were quite good. That being said, if I can find NVO strikes down here, 57 to around low 50s. I have played it several times with my Discord members, and I've showed you guys on the channel. Why mid to low 50s? Well, it's because the next big area of support all the way back from 2022. The stock at this point, it's kind of oversold on the longer term timeframes. Well, not quite on the weekly. It was oversold. If it revisits down there, it will probably be weekly oversold as well. And it just sold off so much, and the valuation is pretty manageable here, even at 65. So you can imagine in the low 50s, it's even better. Another one of that nature for all the Canadian investors out there is Alimentation. Alimentation is very solid, guys. I mean, what they have is essentially they're the largest convenience store chain in North America, and they're tentatively putting in a bid for 7-Eleven, the US arm of 7-Eleven. 7-Eleven obviously being a Japanese company. That's the resulting decrease in their stock price, or the reason behind the resulting decrease in share price, because that deal is going to cost them a lot of money, $40 billion. However, it's coming into historical averages here, which is like the weekly 200 EMA, expansion of fundamentals, very solid company overall. If I have options for Canadian short puts, I wouldn't mind playing it down here in the 200 weekly EMA. 67 down to 65 seems to be like a very decent area. And lastly, two more value stocks. One of them is going to be Procter & Gamble. Sometimes with the value stocks, you got to be a bit careful because they don't have the best premium on them. That being said, Procter & Gamble coming out of its prior resistance, which is now support range, I wouldn't mind playing the bottom end of this range, like the mid 150s, but you do require a bit of a drop. The 200 weekly EMA is curling right up into that area, and normally playing Procter & Gamble in around the 200 weekly EMA has been a very decent proposition, other than during the great financial crisis, and of course the big tariff sell-off of 2018. Special shout out to right now. If we find ourselves down there again, you line up more support regions as well with those guys down there. I wouldn't mind playing Procter & Gamble down there, but it's for those of you that don't mind playing it on more defensive stocks. They just move slow. And the last one like that is Johnson & Johnson, right? Johnson & Johnson prior resistance range, current support range at least since the end of 2023, and has held up as of right now in the mid 140s. Not a very bad proposition overall. 146 down to 141. It's just that they move very slow and the premium is not the best. So you really need to wait for big red days on these to really free up some good strikes. And now lastly, the final segment. If you have a big account and you want to look for bigger companies, here are some that I have on my watch list constantly for playing the wheel with my very large account, right? First one is going to be Accenture. Very simple, guys. A very simple consolidation range, right? 290 down to 260. Now, the bulls have come up rather a lot recently, but if we look for a higher low and we get a little bit of pullback with the rest of the market, because this one moves with the rest of the market, and I can find some strikes down here, 290 to roughly 270, I would not mind playing it. It is a fantastic company with great fundamentals, great longevity of the business as well. And we are currently in around the 200 weekly EMA. So if I can find some down there, I definitely wouldn't mind going shopping. Another one like that is ASML. Now, not many people can play ASML because the stock price is very expensive. However, one thing that's very clear is this support range down there, which all starts below the 200 weekly EMA at about 685. Anything below 685 is fair game for me. Talking about 670 all the way down to roughly 600. This little pocket right there on ASML, I would not mind playing at all because the valuation down there does warrant a lot of upside, and we may not be assigned for too long if we do get assigned down there. Another one such as these companies is Moody's Corporation, very solid company. We have now engulfed the most recent support range that we lost leading into the tariffs. And you might just be looking for a little bit of a good old breakout retest. If Moody's gets rejected from this resistance, pull back into support and all of these short-term EMAs. 470 down to 450 is my target range to play some Moody's short puts, because I would not mind being assigned this company with a large account, guys. When you have a very large account, you want to go for the best of the best in terms of quality companies, and I think Moody's does meet that criteria. On to another one, talking about the best of the best. Well, we have to bring up Lockheed Martin. Lockheed Martin has been traditionally a little bit flat of the last 2-3 months, but that's perfect for riding the wheel, right? In terms of where we are, we're above the 200 weekly EMA, which when we choose to write puts in around the 200 weekly EMA, has it been a bad proposition over the last 15 years? Not really, right? You have a 5-year trend line and you have two very large subsequent areas of support. The first one is down here, 462 to 450. So I would like to play the bottom end of this, 450. Matter of fact, I played it with my Discord members last week and it worked out very well. But let's say your maximum size on LMT is 2 contracts. Well, one could be done here. And if ever we have to be a bit more patient, I would always be writing 1 contract here, leaving some room to DCA into the lower 400s if ever we come down there, because I think that will be the final resting area for LMT. If that is the case, it is a much wider area of support, and the bulls have played fantastic defense there, at least over the last 3 years. So keep that in mind for LMT. Another one is going to be Adobe, a bit of a growth stock that's kind of been left behind, coming into resistance right now, but the bulls doing a great job of engulfing the most recent leg of selling with a beautiful new weekly uptrend. That being said, if the markets pull back, well, that could be synonymous with opportunity for Adobe. 380 down to 350 as low as I can get into this support range. It is the bottom end of support from 2022 into 2023 and the bottom of the tariff fear lows. I would not mind playing Adobe there. We covered it after their earnings and in around that range. The valuation does support some good upside momentum. And lastly, another big growth stock that not many people have access to is Meta. So Meta, I would not mind playing this one on a back test down here of the weekly range that we just broke out of, which is roughly 600 down to about 550. Now Meta is in a very nice weekly uptrend. However, we're getting a little bit hot on the short-term timeframes right there. You can see daily was a bit overbought. If the markets consolidate overall and Meta goes for the gap fill, either in one shot or two shots with a daily downtrend, and we come into this area of support with all of your short-term EMAs, especially the 200 moving average right there, well, down here as low as possible, 575 to 560 could be a decent little area to write some short puts if Meta is a company that you like a lot. The valuation, even up here at 635 in terms of a forward price to earnings, is quite manageable. So this one is on my watch list if ever we pull back for a large account short put entry. So guys, that is pretty much everything for today's video. Hopefully you learned something, and if you did, you might consider dropping a like. Would appreciate it for the growth of the channel. You can also consider subscribing if you like this video content. We do this every single Sunday in preparation for the upcoming week. And lastly, but not least, if you have any questions on the strategy, always feel free to leave them down below, and I'll be very happy to answer you. Now, if ever you were interested in joining a community that specializes in this type of trading style, but not only this, I can help you guys out with credit spreads, debit spreads, leap call contracts, share swing trades, all types of trading, whether with shares or options, because we do pretty much everything in our trading Discord, you may consider joining ours down below at the link in the video description. You get access to all of my trades in real time. Here's how last week went. You can see there's a number of wheeled trades that we did, but also some of the assignments that we remanaged, and also the directional trades too, because we do a lot of directional trades, sometimes long, sometimes shorts, depending on market conditions overall, and even some lottery trades as well. Here are some of the wheel trades that we've gone through pretty much over the last 4 or 5 weeks at this point. So everything has been going pretty well in terms of the overall bull or bear market strategies, depending which ones you want to employ. And you also get access to our private morning live streams every Monday through Friday, where I stream live for 2 to 3 hours at the open. I trade live, finding all these opportunities for you guys and for myself, and answer all your questions on your stocks, your options, and your long-term portfolios, because we also put a lot of emphasis on building long-term portfolios and creating your wealth from a trading account and a long-term portfolio at the same time. So you get access to those live streams. If you can't be there, they're always recorded, or you can ask me all your questions in our chat rooms all throughout the day. I'm very fast to answer from 9 in the morning to 9 o'clock at night. You also get access to my private videos where I explain all of the option strategies that I use in a lot more detail. I also do videos on technical analysis, fundamental analysis, how to trade within small, medium, or large accounts, which styles of strategies you should be using to maximize output and risk to reward depending on your tolerance. All very instructive videos there. And lastly, you get access to all of my watch lists, my options watch list that I use to find all these plays, all of my watch lists, and all of my technical analysis. You just copy paste all my charts with 2 clicks of a button. You get all my TA levels and all of my fundamental analysis on hundreds of stocks overall. All that is included in the Discord, and the link is down below if any of that interests you. Hopefully I get to see you in there soon, and if not, I guess I'll see you back on the channel, guys. Pleasure as always. Have a great rest of your weekend, and I will see you throughout the week. Take care and peace.